I'm very pleased to be able to speak to Mr. Yves Mersch, the Governor of the Central Bank of Luxembourg, a country that we don't necessarily know enough about as a global financial center, as well as a player in the European community. Thank you very much for speaking to us. Give us a sense of Luxembourg in the context of the European Union. How big is your institution, your economy, and the role that you play?
Well, Luxembourg has always been in the center of Europe, a go-between between the two major cultures and countries that dominate Europe, mainly the French and German cultures. But we also, when we were created, were being granted immunity by the English and the Russian superpowers in order to be independent. That was back in the last 2 centuries ago. Now Luxembourg has become a financial center since more than 3 generations. And in terms of total bank assets, for example, it represents close to 1 billion euro. In terms of funds under management, especially in the investment industry, it would be another 2 trillion euro that would have to be added. So all in all, something like 4 trillion US dollars of funds under management. That would put it in a range of, let's say, the 7th largest financial center in the world. It would be the 2nd largest financial center when it comes to investment funds, second only to the US.
And in the global crisis that took place, did you win any wars? Did you gain any ground in being a financial center? You've got stiff competition from other financial centers like Ireland, for example, and Dublin as a hedge fund center. Did you gain any ground during the crisis?
We have recently seen an increase in interest on behalf of what we call alternative investment fund industry, what you call hedge funds. But they have been largely located offshore, and with the crisis, new legislation is forcing some of these activities onshore. And it is Dublin and Luxembourg who are benefiting most from this movement from offshore to onshore. But this is only a small niche activity in financial activities in Luxembourg.
So how would you define Luxembourg's value advantage as a player?
As I said at the beginning, Luxembourg has been always geographically situated in the heart of Western Europe, which has been an area of great wealth creation and of innovation. And since we straddle the 2 major cultural influences in Europe, we have always been playing a part as a go-between, and as such finance is also intermediation. So it was only naturally that Luxembourg developed into financial intermediation. At the beginning it was mainly wholesale banking, but then it developed into private banking, and today mainly in asset management in the area of investment funds.
And Luxembourg as an economy, you seem to have survived the global economic crisis and may well be surviving the current crisis in the euro quite well. Your institutions are well capitalized, and your ability to work interest rates to your advantage is still in place. Give us a sense of why that is the case.
Well, first of all, I would say we have always been part of the European Union. And as such, being a member of the European Central Bank, which was one of the most active banks during crisis management in the crisis, has benefited the country as well, and the financial center as well. Second, we also suffered the de-risking of the financial system that has been going worldwide. But on the other hand, on the asset side, we have had maybe a smaller amount of highly leveraged assets on the balance sheet of the banks in Luxembourg and on the balance sheet of the investment funds. So from that point of view, the fallout and the defaults that happened were rather more limited than in other large financial centers, worldwide financial centers, than what happened in Luxembourg. So from that point of view, we came out of the crisis with a little bit less damage than would have been the case for other major financial centers.
And as a regulator and as the central bank governor, you did make some modifications to your regulatory model in that sense. Can you give us a sense of the changes?
The regulation that we have in Luxembourg is basically the European regulation. But the financial architecture was adjusted during the crisis. We had at the beginning a financial center that was regulated by an FSA-style institution and separately an insurance institution. And the central bank was only in charge of monetary policy. During the crisis we saw that this would be a great weakness, and we gave to the central bank liquidity surveillance of all financial market players, meaning investment funds, insurance companies, as well as banks. So while we keep the FSA for solvency purposes, we gave the liquidity surveillance to the central bank, and this also means that we have a better cooperation needs between the FSA and the central bank than was the case before.
Would you describe the relationship between the FSA today and the central bank as being constructive? Are the FSA people formally from the central bank, for example? And how is that relationship model evolving?
Initially, the FSA sprang from the predecessor of the central bank, and as such the staff came from the central bank. But then, when they were separated, there was a sense of reaffirming the identity, and that did a great deal for being conducive to a constructive cooperation. Now the tide has changed again, and I would say even the present architecture remains to be seen whether the separation model in some elements, like insolvency, is still a model that will survive over the medium to long term, or whether the model of concentration of all activities within one institution would not still be superior. But for the moment, I think this discussion is still on. And I must say, I feel greatly heartened that at the level of the staff, the cooperation is working very well. We do on-site inspection jointly, and we try to keep lockstep with the international developments in this respect.
To what extent would you say that that relationship is part of an integral, is part of the integral process in order to make a financial system work? Especially when you see what happens in other jurisdictions, to what extent do personalities play a role?
I think like information circulates always easier within an institution than between two institutions. Likewise, if you have everything concentrated in one institution, the telephone network is easier if you know one person whom you call up than if you have to call up 27 different supervisors or regulators scattered around different institutions in each country. So from that point of view, it's a question of efficiency, because the name of the game in the future is a higher level and more intense international and cross-border cooperation and exchange of information, and from that point of view, persons matter.